Tēnā koutou. Welcome to this webinar about financial reporting requirements for incorporated societies. My name is Olga Hoxha from the Information Education team at the Ministry of Business, Innovation and Employment. And with us today, we have Alex Stainer from the Accounting Standards team at the External Reporting Board. XRB is responsible for developing and issuing financial reporting, auditing, and assurance and climate standards that certain organizations, such as incorporated societies, must use when they prepare their financial statements. We will kick off with the MB opening karakia. Tawhia tomana kia mo kia maya, ka huri tako aro ki te pai ka horangi, ke rera te oranga moku, mama hitahi ka ora ka puawai. Amatau mahi katoa, kapono, katika, tihi maori ora. So first off, we will talk about the changes for incorporated societies under the Incorporated Societies Act of 2022. And when we will cover off the new financial reporting requirements under the new act, we will discuss what a small society is, and how to determine which financial reporting standards apply to your society. We will also talk about audit requirements and more specifically look at Tier 4 and Tier 3 reporting standard requirements. To finish off, we will talk about other financial reporting considerations. And now I'll pass it on to Alex to take us through the rest of the presentation.
Cool. Thank you, Olga. Kia ora and hello, everyone. It's great to be presenting today. Before I begin, I'd first just like to acknowledge you all and the work that you do. I appreciate that there's a lot of effort in running your societies, and the contributions do make a real difference to our communities. I've certainly benefited from being a member at various clubs over the years, so thank you for all that you do. Now, in this session today, I will be just covering the recent changes to reporting requirements for incorporated societies. The previous act, the Incorporated Societies Act 1908, was over 100 years old, and on the back of a review undertaken by the Law Commission in 2013, it was recommended that an overhaul needed to take place, where the Act needed to have clearer governance requirements and be modernised in some places. And so following a process over the last 10 years or so, the Act was drafted, and now the new Act took effect in October 2023, and as expected, there are several implications for incorporated societies. You will likely need to update your constitution, and you will also have new financial reporting requirements. So previously, incorporated societies have only been subject to the minimum requirements in the old 1908 Act, along with any other requirement that you may have agreed in your own constitution. So with the new Act being introduced, there is a 2.5-year transition period where it will replace the old 1908 Act. And what this means is that societies, if they wish to remain incorporated, must re-register under the new Act between October 2023 and April 2026. And only once you do re-register do the rules of the new Act take effect, and the new financial reporting requirements need to be followed. So what are the new financial reporting requirements? Very simply, some incorporated societies will need to prepare financial statements in line with the XRB financial reporting standards. However, not all have to, and there is an important exception to this. So those societies that meet the criteria of a small society as set out in the new Act can actually choose. So these societies can choose to follow the requirements in Section 104 of the Act, or they can instead use the XRB financial reporting standards. Now, for all other societies, the legislation does not provide that option to follow the requirements in Section 104, and instead it refers to preparing financial statements in accordance with generally accepted accounting practice, or GAAP for short, and in some cases a non-GAAP standard. So where these terms are used or referred to in the legislation, it means the applicable financial reporting standards issued by the XRB. So therefore, incorporated societies that do not meet the criteria to be a small society will need to apply the XRB standards. And more on the XRB standards shortly, but first I would like to cover what a small society is. The criteria to be a small society is that you must have both your operating payments and your current assets less than $50,000 in each of your last 2 financial years, and your society must not be a registered charity or an approved donor organisation within Land Revenue. Now, note that operating payments are the total of expenses that were actually paid during the year, so either in cash or from your bank account. This excludes capital payments such as purchasing assets or debt repayments. And current assets are defined in the regulations that accompany the Act, specifically for this criteria. However, total current assets include those assets that are expected to be consumed, used up, sold within 12 months after the society's financial year end. Or it also includes those assets that are primarily held for the purpose of being traded. And this is in contrast to non-current assets such as equipment or buildings, where you expect to hold the asset for a much longer period. So ultimately, if you are a small society, you can choose to either prepare your financial statements in line with the requirements set out in the Act or apply the XRB reporting standards. And the minimum requirements that are in Section 104 of the Act are practically the same requirements that were in the old 1908 Act. And they state that your financial statements must contain information on income and expenditure or receipts and payments, your assets and liabilities, and your mortgages, or if you have any other security interests over the property of your society. So for a society that's electing this option, nothing much changes. You can largely continue to prepare financial statements in the same way that you have always done. For all other societies, you will need to apply the XRB reporting standards. For context, the XRB issues reporting standards across 3 different sectors: the for-profit, the public sector, and the not-for-profit sector. Most societies can use the accounting standards of the not-for-profit sector, and we expect this is the case based on the primary nature of what most societies do and have been started for. So the XRB considers that a not-for-profit is an entity that aims primarily to deliver goods or services for community or social benefit, not with an intention for returns on equity or to equity holders. So this does not mean that if you generate a surplus that you cannot be a not-for-profit. It just goes back to your intention and what you will use those surpluses for. And the new Act also prohibits a society from primarily operating for the financial gain of its members. However, we do acknowledge that there may be a few exceptions and there may be a few societies that fit better in another sector. So if you do want to review that further, you can take a look at XRBA1, which is a document on our accounting standards framework, and in Appendix A, it provides some guidance on how you can make that assessment. So once a society confirms its relevant sector, you'll need to determine the applicable accounting standard to apply. And our standards are actually grouped by reporting tiers. And these tiers are based on the financial size of an organisation. So tiers 1 and 2 are for our larger organisations. These are subject to more complex requirements and they're based on international standards. These societies will also very likely need to have their financial statements audited. However, we only expect a very small portion of societies will need to apply this tier. Tier 3 is for our mid-range to smaller organisations, and it is a single New Zealand financial reporting standard with simpler and more straightforward requirements than tiers 1 and 2. And tier 4 is for our smallest organisations, and it is again a single New Zealand financial reporting standard. And it's been designed to be picked up by anyone to use to prepare their financial statements. And we actually expect that this tier, the majority of societies that need to apply the XRB standards will fall into, and so therefore they'll use that tier 4 standard. Now, just a couple of notes around these tiers. So for societies that own or control another entity, the reporting tier must be assessed based on the sum of your total expenses or your total operating payments across the society and all entities that it controls. And finally, please note that public accountability is a specifically defined term in XRBA1, so you should not take a general meaning of that term when making that assessment around whether your society is publicly accountable. Now, as noted before, these requirements only take effect once your society has re-registered under the new Act. And so from that date, you must apply the requirements to the preparation of your next set of financial statements. For example, if your society has a financial year of 30 June and decides to re-register in December 2024, if you had already completed your 30 June 2024 financial statements, your society would apply the new requirements to the 30 June 2025 financial year. It's important to note that the new Act also requires that financial statements are completed and, along with an annual return, are filed within 6 months of your society's financial year end. In terms of an audit requirement, only certain larger societies will be required to have their financial statements audited. So a society must not be a charity, as charity legislation will apply for your audit requirements. But you also need to have operating expenditure for your society and all entities it controls. It must be $3 million or more in each of the last 2 financial years. Now, we do understand that a number of societies have their financial statements either reviewed or audited already, and this may be due to other legislation, or it may be a requirement that you've agreed within your own constitution. Nothing needs to change here for these entities. It just means that the societies that meet this criteria must now have their financial statements audited. I now want to give an overview of a couple of the XRB standards so that you get an idea of what is involved when using these. So first, I will cover the Tier 4 standard. As noted before, it is a single New Zealand reporting standard, so all your requirements are included in one document. It is a cash-based standard, meaning that transactions are only recorded when cash is received or paid. So this means it captures payments and receipts through your bank account as well as physical cash. And this is in contrast to recording transactions when they occur, such as recording an invoice when it hasn't been paid. So you'll need to prepare 2 statements. So there's a statement of service performance and a statement of cash received and cash paid. And you'll also need to provide some explanatory information in your accounting policies and the notes. There is also a first year concession where you can apply the Tier 4 standard from just your current financial year. You do not need to go back and apply the standards requirements to your previous financial year information, or even display any previous year financial information in the financial statements. Instead, you can just attach a copy of your previous year financial statements to your current year financial statements. So access to the standard, guidance and templates is on our website. And just to cover some of these components in a little more detail, I'll just walk through them. Starting with the statement of service performance. So this statement's intended to outline the performance of your society from a non-financial perspective. So it aims to provide information that helps your members or other readers of your report get an understanding of what your society is doing to achieve its objectives, align with its purpose. So the statement will ask you to describe the main activities that you have undertaken during the year and to provide a measure of those main activities. And this might be the number of specific events that you've held or meetings held or new services that you've performed. And you can present this information in whichever format. So you could use graphs, you could use tables, images, infographics. We do have a template, and this is featured on the slide, and it just provides a very simple format, and this is just a written description. Now, the statement of cash received and cash paid. This statement summarizes all transactions that are recorded through your bank account and those transactions paid or received in physical cash during the year. It will ask you to classify these individual transactions into common groups or common line items, as the standard notes, in order to present combined totals for the year. So there are 2 main sections. You have your operating activities and your other activities. And operating activities simply include your day-to-day activities, whereas your other activities will include payments or receipts for capital items, more one-off type transactions. And so this might include purchase of assets or making an investment or receiving funds from a loan. The format of the statement and the classifications to be used for these line items, they are set by the standard. So for instance, I've only shown 2 line items on this slide. So there's donations, cohort bequests and other fundraising, and general grants received. These are set by the standard, but there are of course other line items set in the standard to cover all the different types of receipts and payments. And so these line items only need to be used when they are applicable to you, but it's worth noting that they should not be combined together or separated into more detailed items in this statement. You can include a further breakdown of information in the notes to the report. For instance, if you wanted to show individual components of the general grants received, you would do this in the notes. You can also change the names for these line items if you think it will make it more understandable to your members. And because the statement is all about cash, it reconciles your opening cash and bank balance from the start of the financial year with your closing cash and bank balance at the end of your financial year. So it is a great check to ensure that all your transactions are recorded and just provides a really good process for you to follow. Now, the other component of the report is the accounting policies and the notes. And the purpose of these sections is to provide that explanatory information that just helps the understanding of the report. And the first component of this is to provide a description of how your entity has done its accounting. And there are 2 main parts to this. So first of all, it's how have you prepared your financial statements. And this would include saying that you've prepared the report in accordance with the Tier 4 standard and that transactions are recorded on a cash basis. And the second part of that is how have you recorded GST in the report? Is it on an inclusive basis or a GST exclusive basis? Wording is provided in our template. So I suggest if you're looking for help on that, you should go and visit our template. The next component is information about your assets and your liabilities. Now note that no balance sheet or a statement of financial position is required for the Tier 4 standard. So you will need to provide a description of your significant assets and liabilities, but you're not required to be exhaustive here and list every single asset that you have, only the more significant ones. And for assets, the amounts that you record them at could be what you purchased the asset for, or it could be an estimate of its value. And this estimate of value could be based on the replacement, what that would cost, or an estimated sale price, or for land and buildings, it could be a rateable value. And it's a similar situation for liabilities. You provide a description of the amounts that you're owed to other parties, and you would show the amount that's required to be paid to settle that liability. And so for both liabilities and assets, the standard will inform you of the format and the applicable line items to be used. Finally, there is a related party disclosure, and this type of disclosure aims to let your members know and other users know whether any transactions have occurred with those that are closely related to the society. So those parties that could have a close relationship with the society are listed out in the standard, but generally it will include individuals and their close family members that have influence over the decisions of the society. So it's likely to be those on your committee or even those managing your society. The template and the standard will step you through those requirements. And last year, we actually produced a short animated video that explains how to use our Tier 4 template. There are links to this on the XRB website, and I'd recommend taking a look if you do have a few minutes. Now over to the Tier 3 standard. I won't go into as much detail on this, but this standard is also intended to have straightforward requirements, especially if your society is not subject to a lot of complexity. It is again a single New Zealand reporting standard, so one document with all your requirements included in it. Now it is accrual based, so this means transactions must be recorded as they occur rather than when cash is received or paid. And like the Tier 4 standard, there is a first year concession where instead of redoing your prior year numbers, you can instead attach a copy of your previous year financial statements to the set of current year financial statements. So with the statement of service performance, this is similar to Tier 4, but you will need to provide information on what your society is aiming to achieve over the medium to long term and your progress towards those objectives. So to give an example of this, a society's mission or purpose could be to support and promote participation in a certain sport. And maybe it would have medium to long-term goals of increasing youth participation or improving facilities or increasing engagement with the community. And then you would tie the activities that you've undertaken during the year to these particular objectives. You should aim to provide information that's of most use and relevance to your members, and it will likely include information you already aim to communicate with members in one way or another. Now, with these statements, the statement of financial performance, financial position, and cash flows, it's worth being aware that there are presentation and format requirements for how you prepare these statements. So this means that there are also classifications that are specified for your revenue, your expenses, your assets, and your liabilities. There are also prescribed accounting policies which dictate how you record these different types. The different types of revenue, expenses, assets, and liabilities. For instance, in terms of revenue, there will be a specific accounting policy for how you record membership fees and subscriptions. You will only need to make a few estimates, such as for recording depreciation on property, plant, and equipment. For depreciation will need to be based on the estimated useful life of the asset as opposed to an IRD depreciation rate. Now, for the statement of accounting policies, again, similar to Tier 4, it will require certain policies to explain how you've done your accounting and a statement of compliance with the Tier 3 standard. But you'll also need to include accounting policies for significant items. So this could be your significant assets and liabilities, which will often tie to your revenue and expense policies, but you also may have significant judgments or estimates that you need to show. And if you do change an accounting policy, then it will need to be noted. And the notes to the performance report, this is where all the explanatory information is included, anything that would be useful to provide context to your members. And the standard does specify that certain notes need to be included when they are applicable. And these include certain things such as information on your related party transactions, again, similar to Tier 4, or when you need additional analysis on your property, plant, and equipment, such as breaking it down into classes of assets with cost, depreciation, revaluation, etc. And so that is just a brief overview of the main components of a report prepared using the Tier 3 standard. If you do want more information, access to the standard, guidance, and templates are available on our website. Finally, I also just wanted to introduce some other high-level things to consider from a financial reporting perspective. So first, you may have included other information in your previous reporting that is no longer required. We do understand that some societies report trading statements for bars or for livestock, or maybe include reporting that's segmented by membership class or by membership and non-membership activities. Applying the XRB standards does not mean you must exclude this information, but it is worth considering whether you continue reporting on this and how you do so. So you may consider, do your members still need this information to be reported going forward? Could it be reported separately? Or if you do want to include it, how would you integrate this into your notes? Second, there's the service performance reporting. I have discussed these requirements earlier, but you may need to consider what your members' expectations are in terms of your service performance reporting and the measures and objectives that are used, and the information that they actually want. And because this does relate to non-financial information, do you have the data and the information required for what you actually want to report on? Now, if your society will be subject to an audit, your statement of service performance will also be within the scope of the audit. So it is worthwhile understanding the support required to substantiate your disclosures in this statement. And third, accounting for interests in other entities. So tiers 1, 2, and 3 of the XRB accounting standards include requirements for consolidation and for the accounting of interests in other entities. Determining if these requirements apply to you is not always straightforward. And if your society does need to apply these requirements, you will need information from other entities in order to complete your financial statements. So if you own or control another entity, it is likely that you'll need to consolidate. And this refers to the process of combining financial information across all entities within a group to present a single set of financial statements. You may also need to consider if you've entered into agreements with other organizations to jointly run a type of operation or activity. In these cases, you may need to account for a joint arrangement. And if you have an investment that will give you significant influence over an entity and how they operate, in these cases, you may also need to account for an investment in an associate. So these things all have specific requirements, but the main thing to be aware of is that you will be reliant on information from other entities, which is something to consider from a timeline perspective on when you need to complete your financial statements by. And finally, I would suggest just considering the time, effort, capability to make change. I know that some societies may face situations where the impact is more significant, and it is important to consider what those changes will mean for your society and when you need to have your financial statements completed by. And so some of the things you may consider: are you now subject to an audit? Do you have any specific issues or complexity that you face? Maybe you do need to account for interest in other entities. The timelines where you need to address these items by, and also just the capacity that you have within your organization to implement these things, these changes. And now that is everything from me and what I wanted to cover in this session. I will now hand back over to you, Olga. Thank you very much, everyone.
Thank you, Alex. Very interesting and insightful presentation for us. Really appreciate your time. So if you have any questions, you can always go to the XRB website where you can sign up for updates. Alternatively, you could email the accounting standards team at accounting@xrb.gov.nz. Or if you have specific questions about the law changes and would like to reach out to the Registrar of Incorporated Societies, you can use this email address, which is engage@societies.gov.nz. We'll be looking forward to your questions. And this brings us to the end of our webinar. So we'll close off with MB closing karakia. Kahike te tapu, kia watea ai te ara. Kia turuki ai te ao marama, huie tai kie. Thank you very much, Alex.